Access Core Holdings, the parent company of Nigeria's leading commercial bank with a huge Pan-African and global footprint, is in the market right now, offering its existing shareholders a total of 17.77 billion ordinary shares at 19.75 naira per unit. Giving me more perspectives into this big offer on Broad Street is Opeyemi Agbaje, who is an economist and market professional and the CEO at RTC Advisory. Good having you on the show tonight, sir. Thanks for coming. When a big offer such as this in the market, we got to talk to big folks like yourself to give us beyond the noise. Yeah, thank you. So give me your what do you make of this Access Holdings decision to offer a right issue, technically meaning giving back to its shareholders?
I think the fact that it's exclusively a rights issue is of itself a measure of the confidence of the institution, that its existing shareholders have been well rewarded for their stake in the institution, and they're happy to reinvest. I think the fact that they've not bothered to include an offer for shares, a public offer, say something about the quality of the stock on offer. I think more broadly, Access Bank has grown to become a leader, a real leader in the industry in terms of size, in terms of profits, in terms of footprint across Nigeria and Africa, and in terms of innovation and the things they're doing. So this is clearly an important offer. And that's why I would be willing, for instance, to speak about it.
Because again, when you talk about a rights offer, times are hard, as it were. We all know that. So to ask existing shareholders, and you do advisory business and you advise body corporate and all of that. So look, when you try to go back and say, look, I'm going to ask you for more, like you said, so it means you must have treated them nice over the years.
And it means you are sure that about the quality of your investor base. You are sure that they're very appreciative. You've done your sampling, you've done your, I believe you've sounded them out, and you're fairly confident that your shareholder base is the right type. Yes. They have the liquidity at a time like this, and they have comfort in the quality of the stock. So
and quality of the organization you've run so far, and the numbers you presented. Because if they don't trust your numbers, you can't ask them for 350 billion.
You would have to do a public offer and run around quite a bit to make the offer. And it's a significantly large offer, raising 350 billion naira, 351 billion naira. So it's a big one, and I think it's fitting because of the performance of the organization.
So what key information metrics do you think the public, the shareholders, should look into when you're looking into an offer such as this, which is a right issue?
First of all, you must look at the historical performance. Does it justify further extending yourself? Because this is to existing shareholders, further investing, extending your portfolio.
Digging further.
Yes. So that's a historical performance, which I think from every standard is impressive. I remember the first time I did an analysis that included Access Bank in 2001. It was a tiny institution. It was like what I called a margin bank, very far away from the leadership of the industry. It has since entrenched itself first within the entrepreneurial professional banks that control the industry, and now right at the top of the industry. So if you look at historical performance, you will be comfortable. If you look at governance, you'll be comfortable a bit, because ask yourself, we had the tragedy of Agbaje just a few months back. But this transition has moved on. It's been more or less seamless. You've had a new CEO, a new chairman of the bank who knows the bank very well, who has come out of retirement to take charge. And you have people who have been decades in the organization step into a new CEO of the holding company.
Exactly.
And Roosevelt Ogbonna in the bank. So there's stability. I guess you would also look at purpose of the offer. What are they going to do with the money? And in that wise...
I'll talk about that, how the deployment comes in, because I'm sure as an advisor and someone who who do a lot in this area. But when you talk about, I think Access Bank will be described as a Lionheart organization. Yeah, when you look at when it came out and said it acquired Diamond Bank and did Intercontinental, considering what happened to Intercontinental back in 2000, just about 10 years ago or thereabouts. So how would you describe those big moves that some folks were very careful to tread,
frankly,
or afraid?
With the benefit of hindsight, the moves have been astounding. And you've mentioned not just the big acquisitions, Intercontinental, Diamond, the movement across Africa. Now, Access Bank has become a very well-entrenched Pan-African institution, and even globally into the global financial centers. And in some countries outside Nigeria, the bank is already one of the major banking and financial institutions in those economies. So the moves in the bank is, like you said, Lionheart is very courageous, very ambitious. However, it has executed many of those things with discipline, with effectiveness. And so that should offer some assurance to investors. That should assure them that taking this offer, a big one, and that it would deploy the capital in an efficient and effective manner, and it should produce better returns than a larger institution.
I'm sure you've seen the offer document and all that. So I'm sure you're going to take a very deep look at how the deployment of the rights issue. How do you think that should go?
Well,
there's a recapitalization, of
yes.
course. The central bank wants that on the table.
Yes.
What else should be done?
Yes. I tend to look at the access offer beyond the central bank's capitalization requirement. I think the institution needs to take on stronger, and that is what I expect them to do, and that's what the offer document says. It needs to grow its capital buffers in an era in which the Nigerian economy has uncertainties. So grow your capital buffer, invest in technology, support your subsidiaries, both technology and financial services, and across Africa. So that's essentially how the funds will be.
I'm sure if they ask you, you wouldn't mind them taking other bigger banks, either within or outside.
with Access Bank.
Because they got a Standard Chartered Africa deal on the table before Wigwe's demise.
With Access Bank, there's nothing they do or attempt to do that will be surprising. And if you think carefully, some of their competitors, even within the Nigerian space, are becoming possible targets for acquisition. But
don't tell me what you know or what you don't know.
You know? So I mean, the bank is growing.
Perhaps within this 2-year period
yes.
of recapitalization,
yes.
Perhaps there could be some easy picks.
That's the point I'm saying. If you look at some of the banks, you would ask yourself, why not take a strong Tier 2 bank, or maybe even a Tier 1 bank? So that those opportunities could emerge, and with Access Bank, I would not be surprised. And like you also mentioned, if there's a Pan-African opportunity to strengthen and consolidate your African footprint.
Again, when you look at intra-Africa trade, and I'm sure you're keeping an eye on that, and you can do this whole intra-Africa trade. Nigeria is going in now with the first shipment. When Kelemene was in Nigeria, was in Lagos last week or so. So without the banking system, I'm not too sure if we can do much within that new program of AfCFTA.
And there's the African Continental Free Trade Act,
agreement.
The growth of African institutions like the African Development Bank and Afro-Exim. And there's the imperative, which people like Aliko Dangote and other Pan-African businessmen, Tony Elumelu, always draw attention to, for increasing the financial linkages across Africa. Access Bank and one or two other institutions are becoming well-positioned to lead that integration of African financial.
You think that's good news for Nigeria?
We'd better lead after, or somebody else
will take our lunch. Now, we need our banks there, by the way. And again, the $1 trillion economy ambition, by the way, whether we get it or not, at least you can't blame yourself for getting bigger in the banking industry. The bigger, the better. But what are the expected short and long-term financial benefits for shareholders?
Oh, well,
picking up this rights offer.
Well, you would expect a short period of the shares being abundant and therefore some. But easily, quickly, we can expect consolidation in the market post-issue, and then bigger profits, bigger growth. I think this offer should support the bank's future growth aspirations within Nigeria and internationally. And you would have the assurance, I think most importantly, you would have the assurance that this institution is well capitalized for the scale of the challenges that it continues to take on. And so you're not going to be playing with marginal capital positions and taking on big risks.
Oh, by the way.
So there is also safety.
Yeah, you better be prepared for Basel III is around the corner. It's all being discussed and all of that.
Exactly.
So capital is a major issue for banks right now around the world. But again, market reaction to all of these, the shares are, and it's for everyone. Right now, you're doing an offer. Your price is on the exchange is allowed to move, while your rights offer is also in the market. So there could be a bit of you think that's a window for investors.
Oh yes, if you are not an existing shareholder, you can still access those shares on the market. Rights offers are tradable and all of that. So everyone can have the opportunity to access these stocks. And I think it's an opportunity for many or most enlightened investors.
Overall, what's your view on the bank recapitalization program, broadly speaking? I
think from the central bank and from the regulatory point of view, you have to support. I mean, the logic is clear. The naira has gone down by a significant margin. That means the capital of our banking institutions been significantly eroded. Many of them have foreign positions and have benefited from that recapitalization. But the safe thing to do is to stress test our banking institutions and prepare them for greater capital buffers. So the regulatory motive behind it is, for me, is very clear. And I think I commend the banks. They've been, as usual, very proactive in responding to. So we have multiple offers on the market. We're going to have that for a while. And at the end of the process, you would have a safer and a stronger banking sector.
Very, very interesting. Again, if you look at the banks, especially those with a global and Pan-African and footprints, FX inflow on their FX on their balance sheet will be some good news. At least for currency outside the naira.
You see, when Access in particular was expanding across Africa, I supported the move. I indeed advocated such moves. But at some point, I questioned myself. But today, the benefits are showing, especially as those institutions across Africa are reaching scale. When they were marginal, small startups, it didn't look, at some point, I'm sure even the investors in Access Bank may have questioned those investments. But quickly, as they're reaching scale, as the stability is coming and they're contributing to profits and to growth and to FX positions.
Yes. And things are changing across the continent. We've seen a number of economic growth across some markets. And I think that's my takeaway from the facts behind the rights offer that was done at the exchange just about a week or so ago. Oh, thank you very much, Mr. Opeyemi Agbaje. It's good to have you.
A pleasure to be with you.
Thank you so much for lending your voice to the banking industry and what is going on out there. Thank you so much on the side of Access Bank rights issue. Have a great evening. Thank you.
You too. Thank you very much.